What's going on, party people? Friday. It's Friday. Tough times out there in the real estate world. Let's break it down. Let's take a look and see what's under the hood of this thing. There's definitely something under the hood that we are certain of. And, always the greatest risk to the financial markets is the stuff that's going on behind closed doors. It's just like the mortgage market before the crash. They were packaging up those that mortgage paper and putting a bow on it and selling it out to people like it was AAA rated paper, even though those are people with 600 credit scores and they were literally no income, no asset. So you always wonder, like, what could it be? There's something I'm going to share with you today that is important for everyone to know. Things like this do happen. They are going on. It's not just the United States, not just Wall Street. There's plenty of places where strange financial things can take place. Credit default swaps are a little complicated. There's some weird stuff going on there. I'm not going to get into that. But we did see mortgage rates edge higher again today. Not huge league, but up nonetheless. Now, I can tell you for me, my rates here, like on the 30-year fixed, like this is more like low sixes. Those are about right. VA, FHA, more like 6%, not quite 6.5%. I think the average rates for FHA and VA went up quite a bit. Part of the reason for that, just so everybody knows, and I'm always trying to peel the curtain back. I want you to know how this stuff all works and what everybody's really doing out there. Most banks make all their money on FHA, VA, okay, govies. That's where they have the most margin built in. The conventional stuff is too competitive, whatever you want to say. They have less margin on that, and there's more margin on the govies. So in times like this, where mortgage banks are maybe struggling a little bit, volumes down, they still have a lot of expenses. They're trying to catch up by cutting expenses. They very well may just be ratcheting up margins for FHA, VA. In which case you would see, like on a day like today, where bonds are down 22 basis points today. Nothing crazy. We'll take a look at the structure of that here in just a second. But so why would, FHA and VA rates on average, remember, mortgagenewsdaily.com, they're just aggregating a bunch of different sites and information on this. Why would VA and FHA rates be up 0.25%? That could very well be the reason. So, our rates are a lot lower than this for FHA, VA, but it just shows you kind of what's going on. We're up, rates are up a little bit. Okay, rates are up a little bit. So let's take a closer look at the charts, and we're going to dive into a couple things on this Friday. Trying to share as much information as I can. This is a difficult situation that we're in. Geopolitical situation is not good. What's going on in Ukraine is not good. What's going on with Russia is not good. Who knows the reality of what's going on? We only know what the media tells us, and I don't trust them one bit. Don't believe a freaking word, any of them. So who knows what's really going on, but we know there's tension. And the markets tend to not like that, because what it does is it increases the probability of a black swan or something happening that could derail a lot of different financial markets. And so speculators start to factor that in. They go, you know what? I maybe don't want to have this risk on right here. Let me pull that off for a second and just see. And so you're seeing that happen in a lot of different places. Mortgage bonds, we had those 2 terrible days. Let's see, this is Friday, Thursday, Wednesday. So it was last Thursday, and then Monday were really, really ugly. And then we got a little reprieve on Tuesday. Wednesday, we had a nice run. And now we seem to be in just a new range here. Seems to be starting. I'm okay with this. This right here was the part we said, okay, hey, this is our previous support that's now turned resistance. We're going to have a hard time getting through that. But, this, I'm okay if we go sideways for a little bit. That'd actually be fine. Be totally good with it. Just some stability really, really helps. In fact, I've even seen just in the last couple days, rates have to some extent at least stabilized, and buyer activity is there. There's a lot of people asking about real estate, a lot of people wanting to get quotes, wanting to get pre-approved, wanting to see if they can buy something. It's just where the rubber meets the road, at that payment threshold. That's where people are going, oh man, it's that much? Dang. Wow. Yeah. Okay. And so that's kind of it's interest rates are the thing. We have a lot of interest. So what's happening is a lot of these people are moving to the right. on the timeline saying, "Hey, well, we'll wait. I'm in a holding pattern. I'm going to hold off. I'm going to see what happens." And so what they're stacking up to the right. And so what that is preparing us for is the next boom. When a bunch of people who are willing and able to buy, who actually want to buy, but they don't, they wait, they're pushing to the right and they're stacking up a line of people over on that side of the timeline. So those people are all sort of going to participate in the next boom upcycle. So what happens between then and now, or between now and then, we should say? Between now and then, you're going to have some savvy investors buying. You're going to have some people who are, primary purchasers that just are betting on the fact that rates are going to go down. They're going to get this place today at a better price. They're going to negotiate a deal, and they're going to get a better rate later. So there's kind of the two boats, but there's still multiple offers on some of these homes. In fact, we have an offer out, and the buyer said, "You know what? Tell them I'll do more." We haven't even received a counter. All the listing agent said was, "We've received it. Thank you. We'll get back to you." And before they got back to us, the buyer told his agent, "Go ahead and up the offer." And they upped the offer, and they sent over a new offer now without even getting a counter. So there is still a good amount of solid buyers out there, qualified buyers out there who are attacking this market. And we're starting to see more and more homes come off the market. But overall, right now, what we really, really need to see is stability in interest rates. So I don't care if it's here. I would love it to be higher up here where rates are lower, or even higher up here where rates are lower. But if we can just get some stability and stop doing this downward thing that we've been doing for, look at this, just, we've been doing this for a while. Yeah, this mortgage bonds go down thing has been happening for quite some time, almost 2 years. Over it, if you're over it, and it'd be great to at least go sideways for a while. So that's what we really need to see. Hopefully that's what we see soon. PCE inflation, this is the Fed's preferred gauge. This is part of the pressure that's on bonds right now across the board, inflation. The PCE, which is the Personal Consumption Expenditures Price Index, which excludes food and energy, it rose 0.6% for the month. It was, long story short, it's higher than expected. Now, the Fed's actions, they were slow. Remember, they're always a day late, dollar short. They were slow to act, and it takes a long time for their actions to have an effect. So have we even really seen any effect from the Fed's actions yet? It's arguable. Maybe not. Other than the financial markets bracing for it, we haven't really seen too much from it. And it could take a long time before we do. In the meantime, unfortunately, because the academics, whom we call the Fed, will simply just look at the numbers on a sheet because they don't actually work in the markets, they just analyze the markets, they'll just keep looking at data that's 3 months old. And eventually, when they go, "Oh, okay, the job is done," they won't realize the wake of what they've done to that time is still coming. That wave has not hit the shore yet. It's still out at sea. And so they're liable to make things a lot worse than need be, especially when you look at this. Look at Vice Chair Boehner. Warns against retreating from the inflation fight. Don't retreat from the fight. Well, no, you shouldn't retreat from the fight, but you should have been in the ring a little bit sooner. That would have been better. Now it is what it is, especially since you want to just, baby step your way there. You're not willing to rip the Band-Aid off. Get it done. Get it done. If you got 275 hikes left in you, just make a 150 on the next one. Let's go. What are we waiting for? What are we waiting for? By the way, we're live. Facebook, LinkedIn, YouTube, and Twitter. How about that? On LinkedIn, my first LinkedIn comment, Daniel Lehman. What's going on, buddy? I hope you're doing well too. My man, Daniel Lehman. Okay. So Fed Vice Chair, not Fed Chair, sorry, Brainerd. Let's see, PCA. Okay. This is kind of the big one here. So I don't know a ton about this yet, but we need to know that this kind of thing is happening, because when you're trying to figure out the direction of the markets and you're seeing things happen in the markets that don't make sense, which is what I've been saying for quite some time now. We talked about the dollar. We looked at the dollar. S&P is going to 3,500, by the way. I'll show you that in a second. This is a weekly chart of the dollar. Red arrows are the hikes. And so, this week was the first week where we kind of looked like maybe we're forming a little bit of a top here. Maybe 112 is it in the dollar. Perhaps that's the case. But either way, the strength of the dollar has just been unprecedented. I mean, it's just crazy how strong the dollar has been getting when we're supposedly in this inflation situation. I've been trying to piece this together forever. You guys know if you've been watching this. Something big could be about to break in the markets. Okay. When Ron and Sana speaks, we like to listen. Now, here's what he said. Long story short, the bonds in England that you saw, when they saw the bond market crash this week, and the central bank had to step in and prevent the crash from happening. And this could be rollover. All the bond issues we're having here could be a part of this somehow. And maybe it's even the same problem. I don't know yet. I'm trying to figure it out. Basically, what they're doing was they're taking their bond investments. And then, so imagine if you have $1 million in bond investments. It's sitting there. It's an asset in your account. Well, you could borrow against that and then use that money to go do something else. A lot of people do this with their stock portfolios, crypto portfolios, things like that. You can do that. It's a pretty savvy thing to do if you're borrowing the money to spend it on something that makes sense. Here's the problem. The problem is this is $1.7 trillion in assets, not a million. And they were using derivatives, okay, to both hedge, but also to amplify gains coming from certain kinds of trades. So they were taking their safe money, borrowing against it to go make aggressive, more risky investments. This is a problem. That's why the central bank had to step in. And there could be even more issues resulting from this. But this is where I'm looking right now, because we know the bond market is broken, and that's a problem. And that's a very big problem for interest rates. And interest rates are the reason we're having issues in real estate right now. Demand is there. People want to own real estate. People want to buy real estate. People are trying to buy real estate, but the rates are just making it tough. And so if we know rates are the main thing, the main mechanism that is controlling what happens in real estate, and rates are directly tied to the bond market, then we had best pay attention to what's going on in the bond market. We had best, especially if you have really smart people who are saying that the bond market might break, and we watched the bond market break in England. We watched that happen. It happened. And if they hadn't stepped in, who knows where that thing would have gotten to? Who knows? So there's several different things here, to pay attention to. Take a look at this, read this article, watch this video. It's a decent interview. And we're going to have to start paying really close attention to what's going on with the bond market. Long story short. Now, the good news is if the bond market does break like it did in England, the Fed, our central bank, can come in and fix it. There's always a way for them to do that, but it requires more money. They have to basically buy the bonds. They have to get on that side of the trade to help balance it out. That would not be ideal from a fiscal perspective, but it could be market saving. If you recall, for those of you who were around for the last crash, right when things were getting just utterly, horrifically terrible. I mean, right when it seemed like, oh man, the stock market's going to zero. Real estate's going to be worthless. The whole system is done. That's how it felt at the bottom. At the very, very bottom, when the Dow was in the 6,000s, that's exactly what we were saying. That's exactly what I was on the radio talking about this. This is it. It's all over. That's what it felt like. They won't let it get that far. The Fed has more of a green light to to fix things, to save things now than they used to. Now they can come in. Everyone expects it. Oh, that's broken? Fed, God, get over here. Buy this fire. They will do that if they need to. They will. And they could buy bonds without saying that it is something that is inflationary. So I do expect if the bond market in the US has a breaking point, has a slippage point, has a crack, that they would be able to come in and patch that without having to derail from their current objective, attacking inflation. So I'm not overly concerned about it long term. I think if there's a break, there'll be a fix. But this slow bleed is harder to triage, isn't it? Because when the bonds are breaking in England this week, it was like one day just whoom, bonds just crushed. The chart was terrible. I should have the chart up so you could see it. It was just ugly. And so, yeah, that requires a rescue, a 911 call. But when you're just getting death by a million paper cuts, when do you call 911? So it's almost like we need that black swan. We need something to sort of jolt this thing. Let's figure out where we're at. Let's figure out what is actually broken so that we can call the doctor to come in and fix it. Dr. Powell. One more thing on Facebook, and then we'll look. I'm going to show you why the S&P is going to go to 3,500. There's more downside in stocks, guys. So there was some negative stuff on Facebook. User growth declined, revenue declined. They're spending tons of money on the metaverse. I have been telling you about how I'm accumulating Facebook stock over the course of 2 years. And I do believe that the metaverse, listen, let me put it this way. Whenever you see the last time Facebook really got slammed, right after the IPO, they're like, oh man, this business is screwed. How are they going to make money? This is impossible. That was the best time to buy. Right now, people just shitting on this stock left and right all over the place. That to me is like, okay, wow, perfect. This is right where I want to be. I want to be in this and I want to own this for the long haul. 10 years from now, 15 years from now, the metaverse will exist. Do not bet against Mark Zuckerberg. The metaverse, he has tons of money and insane resources, extremely motivated, and this metaverse is his life right now. By the way, they already have like $460 million in revenue from this thing. Okay. And no one even knows, but I guess it's there. I haven't been there. Have you? But they're making hundreds of millions in revenue from it. So, and it's not even a thing yet. It's going to be, and it's going to be huge. You probably won't find me there. Probably won't. Who knows? Maybe one day in a nursing home, that'll be the coolest thing to do. And maybe you'll find me there. All right. DXY. All right. We're going to go over to the daily chart here. That's the dollar. Finally, a little bit of weakness after just this insane run. It's still on it too. That pullback is not much so far. We're going to look. I'm going to show you the S&P. All right. Let's zoom this out a little bit. So here's the S&P. Okay. So bear horn here going lower. See it's getting bigger and bigger, creating more volatility. I have a macro Fibonacci right here, and that's where we're headed. We are definitely headed here. Support is broken. Okay, this was our hope was, okay, we have a double bottom situation here. You know, you kind of flirted with it for a little bit, and that broke today, officially. Today, that whole situation officially broke. It looked like maybe you could get a bounce off that, but we didn't really get much of a bounce at all. One green candle, and that's it. It didn't even come up and fill this gap. So expect the S&P to be at 3,500, maybe a little high, 3,505, whatever it is. 3,505. You're going to see that probably next week. Now, will that be it? Is that the end? That's just a 50% retracement. So if I zoom this out, actually, let's go back to the weekly. Okay, here's where we are. Now, a lot of people were saying today, oh, well, you know, the S&P is now erased 2 years worth of gains. And that is true. If you look back to the last time we were at this price, November 2020. Dang, right? November 2020. Last time we were at this price in the S&P. So all that bull run has been erased. And that is a crazy thing to see happen, but it is what it is. I do feel pretty strongly about this area here. As you can see, it was a previous resistance area right on this 50, on this Fibonacci from the bottom. Okay, we drew this right from the bottom, the COVID bottom, to the recent all-time high. And the 50% retracement is right at that 3,505 number. And we're headed right to it. So now I don't know if that's going to be the end of stocks going lower, but I guarantee you it's going to get to that number. Will it continue down lower into the golden pocket down here? Will we see 3,200, 3,100 S&P? That's possible. That is possible. And that's like almost 20% from where we are right now. That would be a very, very solid place for a turnaround. if we don't get it here at the 50. Typically, you see it at the 50, but are we going to get the 50% retracement continuation is typically a sign of, like, it would be like a bullish sign, a macro bullish sign. I don't know if we're going to get a macro bullish sign right now. Now, I've never encouraged anyone to just like sell all of your stocks or do anything like that. If you ever do that, then make sure that you're re-entering right away at a small clip, buying X number of dollars per month, and you're doing it over, of course, a couple of years. Like I'm investing in Meta, Facebook. I said, okay, well, I'm going to put X number of dollars in it, and then I'm going to do that over the course of 2 years. So divide by 24. I'm putting that much in each month. All right, that's how you do it. That's how you invest in these things. It's the only way. You're not going to time the market perfectly. If you do, you just got lucky, and then you'll get cocky, and then you'll make a mistake later. Best thing to do is invest slowly. I'm just preparing you, because also what happens when the stock market goes down is that we have a lot of people who have money in stocks that are looking to buy real estate. You have people who have retirement accounts they're going to borrow from to buy real estate. And then that becomes something that's that they don't want to do as much. I don't want to sell it now that it's low, right? I don't want to get out of these stocks now and liquidate them to go buy a house because it's so low. I want to wait till it comes back up. Very well could hear some things like that. People will make that kind of logic. It's somewhat understandable, to a certain degree, but it's also one of those things where it's take it here, leave it there. If it's like when you're selling and buying in the same market, like right now, a lot of people who could sell buy, this is a market to do it in. If you're sell buying, it doesn't matter what the market is. You're going to either take it on one side, leave it on the other. Right now, if you're sell buying, you're not going to do as well on your sell as you would have 6 months ago, but you're going to do much, much, much better on your buy than you would have 6 months ago. You see what I mean? So you're going to give one place and take the other. So like if you say, well, I don't want to sell my stocks because I want them to go higher, so I'm going to rent for another year and throw away another 50 grand. How much do you need the stock portfolio to go up? More than 50 grand, I hope, because that would just be break even for you at that point. So it's like you're going to give one place, take another. There's kind of no way around that. And you just have to really think through those things. I like to help advise people on stuff like that, just to make the right decisions. Let's see here. We do take questions. We do have comments coming in. Facebook user, anonymous. Time the Feds to buy bonds in December. Hope so. Hopefully they won't let the economy bleed till 2024 or late 2023. The reasons we all know. Yeah. I'm not sure what the X's mean. I can't quite decipher this, but I really don't think that the Fed will do any more than they absolutely have to combat inflation. I just don't see that happening because they really are, I'm sure, under instructions that they need to get rates low again as soon as possible. Because what's happening right now is a lot of government money is being raised and then used to just pay off bills. And that's the big problem. That's the reason why rates will have to be lowered. That's what the goal is. And the reality is rates will go lower eventually because they have to. There's no other option. We can't let rates just run away as a country because we can't pay the bills already. So you can only let that get so bad. Do you know what I mean? All right, so that's the S&P. The Dow looks worse. Oh yeah, oil. Oil still on this downward trajectory. From what I can see here, oil is telling us the story that there is sort of a global situation going on. Heading into winter, you should see a lot more hedge buying here, but we're headed down. Prices are going lower. This is good at the pump, right? But have you noticed how they're not giving us that all back? Like if you go back and trace this, I'm going to do this next week. Actually, I'm going to make a note right now. If you go back and look the last time, and we'll compare the two graphs. I'm going to make myself a note here. Oil, gas, overlay. If you look at, okay, when was the last time we were at this price? You go back to those times we were at those prices and you look at the price of gas, you'll find that it was much lower. Well, wait, how's that the case? So they're not quite giving us all that money back yet. Big oil, they are taking that money to the bank, but still under $80 a barrel. I think it's a healthy place to be, between 60 and 80. That was nice, during the Trump years, we're in the 40s. That was nice. Really, really cheap gas. We're not going to see that in this administration. Bitcoin has held. Let's get out of the weekly here. Some people have been asking me like, hey, I have cash to put to work. Like, what should I do with it? I mean, right now, to me, the only really attractive things that I see, like particularly short term, I like the metaverse. I like Facebook long term. I like Bitcoin long term. So this is a good accumulation time frame. And you can see this is a huge accumulation area here. This upward trend is still holding for the daily on Bitcoin, even though it's still in the 19,000s and change. Would like to see a recent retrace here to the higher area, the 21,000 area. Has not happened yet, but I do like Bitcoin long term as well. Ethereum is also on a new platform now. Ethereum looks good. A little consolidation here on the lower end. So those are the two cryptos. I mean, there's a lot of cryptos out there. Some of them may have some really cool things that they do, but if you're looking to get into something like this, especially for the first time, you don't own anything, stick with the two big ones. Stick with Bitcoin, Ethereum. Stick with the game plan of either buying every week or every month. Just accumulate over time, small amounts, let it add up, and then let time work, because these things are the future, and it's a matter of time. Will it be 10 years, 20 years, 30 years? Yeah, I don't know. But we know that Bitcoin is the perfect money. It's designed to be the perfect money. It's the fairest deflationary money that exists for everyone. That's what it is. So that will win, I hope. If that doesn't win, that means that evil has won. If righteousness wins in this world, then Bitcoin will win. So if evil wins, how much do you want to do with the world anyway? Who knows? All right. So let's see. What was there? One more here. I want to give you guys that link. And I thought I had one more. Let me see. Maybe I put it over here. Okay. Maybe that is it. All right. So be it. Look, we saved another veteran this week who's being overcharged significantly for their VA loan. Please pass along the fact that you do not have to pay fees to get a VA loan. It's not required. You may have to pay a VA funding fee that gets added into your loan, but no out-of-pocket fees are required. They're not. And with rates up right now, a very important time to make sure you're getting the best deal. Give me a call, text, shoot me an email. I'll help you make sure that you are getting just that. It is my honor to help and serve. I've got more time on my hands now than I have in a very long time in this business, and I will use that time to help you. If you need me, give me a shout. Available on the weekends as well. Have a great evening, team, and I will see you again soon. Take care.